Hey guys, welcome back to another video by Fully Informed Trade, or FI Trade for short, knowledge for everyone. My name is Alex Cho, and right now I am going to be talking about the S&P 500 Composite Index. The S&P 500 Composite Index is falling below that 20-day moving average. Like I was saying last week, I anticipate stocks to continue to consolidate. I think it's a much better idea right now. When you trade stocks, you look for specific setups. You don't try to trade the macro picture. Um, First of all, you're going to lose a lot of sleep trying to do it. And second of all, I don't know if you guys work on a non-stop clock where you guys can sit in front of your computer monitors 24 hours a day trading the S&P 500 futures contract. But even if you guys were able to do that, honestly guys, seriously, it's really risky right now to be trading the S&P 500 futures or trying to make directional bets on the S&P 500 because the dollar is continuing to trend higher, the euro US dollar is continuing to trend lower. You would think that perhaps the stock market might continue to fall, but again, I've been through periods like this where the dollar continues to trend higher and the S&P 500 just consolidates and just consolidates and moves backwards, up and forth, upwards, up and down, up and down, up and down, and perhaps it might trend a little lower and then hits the 200-day moving average and it goes up a bit. So to me personally, I think trading the macroeconomic picture is a bit much. I think it's much smarter to trade specific stocks or specific commodities. Some commodities are much more sensitive to a strong dollar trade, like silver and gold. But Standard & Poor 500, the stock indices, sometimes it reacts to a stronger dollar, and on some days it just completely ignores it. So that's just me personally, guys. I think S&P 500 will most likely just consolidate, be extremely volatile in a very, very broad range, like not a narrow range, a broad range. So like expect the S&P 500 to pivot back and forth between a 5 to 3% range in the markets, and stocks will constantly be bounced back and forth, like hot potato. And because we're playing hot potato, um, it's just really hard to time markets. I think it's better to look for a trend-setting signal. And because I don't think there's going to be a trend-setting signal anytime soon, it's just better to look for specific trade setups, look for specific opportunities. And if you guys are longer-term investors, just ignore all of this and just keep on dollar cost averaging. But for all of you guys out there that have specific goals, specific profit expectations, looking to exploit opportunities, don't try to exploit opportunities in a ranging, consolidating, up and down-ish market. Just look for specific trade setups and stocks. So take care, folks. You guys have a wonderful trading session, and I hope you guys make some money today, Friday, and just about any other day of the year throughout the training sessions. So take care, folks.